Welcome to this explainer. Okay, today we're doing something incredibly important. We are mapping out the 13 essential Canadian finance terms you absolutely must master to ace your celpip exam. We're essentially building a whiteboard-style visual vocabulary map that connects these dry terms directly to how things actually work in Canada. If you're tired of just blindly memorizing textbook definitions and you want to start instantly recognizing exactly how the test makers are trying to trick you, well, you're in the right place. Let's get into it.
Here is our roadmap for today. We'll start with everyday payments, then move to special savings and taxes, followed by the credit system and penalties, housing and big transactions, and finally, we'll wrap it all up with a mind map strategy summary.
All right, Section 1, Everyday Payments and Transfers. Let's dive right into our first branch of the mind map.
So first up is the e-transfer, specifically through a system called Interac. Now this is Canada's most common method for instant money transfers. The cultural background here is absolutely key for your exam. See, unlike in some global banking systems where you have to know a recipient's super long bank account and routing numbers to send cash, in Canada, you don't need any of that. All you need is their email address or their mobile phone number. Knowing this little cultural quirk is going to help you immediately grasp the context of the listening passages.
You know, you'll actually hear this exact scenario all the time on the exam. Characters will say something like, "Hey, can I pay my share of the bill via Interac e-transfer?" Usually when they're splitting a restaurant bill. Recognizing that this implies a quick, phone-based, instant transaction will completely help you nail questions about how the characters intend to settle up.
Now, if you want to automate your finances in Canada, you have to follow a very specific sequence, and this is a classic scenario you'll see in the reading passages. Think of it like a puzzle. Step 1. You must provide a void check. This is literally just a canceled check used for one purpose, to prove your bank account information. Once you hand that over, it unlocks Step 2. You can now set up direct deposit for your payroll, which is how basically all Canadians get their salary, or you can set up a pre-authorized debit, commonly called PAD. You use PAD to automatically pay recurring bills, like your utilities or mortgage, so you literally never miss a payment. The test absolutely loves to quiz you on how these three terms relate to each other.
Okay, Section 2, Special Savings and Taxes. This builds into the absolute biggest trap you're going to face.
So here it is, the ultimate test maker's trick. They love, and I mean love, to mix up the TFSA and the RSSP. You've got to commit this to memory. A TFSA, or a tax-free savings account, means any investment returns you make inside that account are 100% tax-free. But on the flip side, an RSSP, the Registered Retirement Savings Plan, well, that's a tax-deferred account. The primary feature they test for an RSSP is that your contributions actively lower your taxable income for the current year. It gives you an immediate tax deduction.
So how do you actually spot this trap in real time? You've got to listen closely for the context clues. If someone says, "I'm depositing my extra savings into my TFSA to buy index funds," the focus is clearly on maximizing tax-free investment growth. But if you hear or read the phrase, "contributing to your RSSP is an effective way to lower your taxable income," boom, the key action is the tax deduction. You can instantly identify which account is being tested just by asking yourself, is the goal tax-free gains or is it lowering taxable income? Moving right along to Section 3, the credit system and penalties. Let's look at the hurdles of building credit.
Okay, if you ever see a number on your exam falling between 300 and 900 in a financial context, they are definitely talking about a credit score. In Canada, the two major credit bureaus, Equifax and TransUnion, calculate your score strictly within this range.
And here is a massive cultural context point for the exam. They frequently embed the concept of a credit score not just in banking scenarios, but in reading passages about housing. For instance, a passage might say, landlords usually run a credit check to see your credit score before renting. You really have to understand that in Canada, this score isn't just for getting a shiny new credit card. Landlords actively use it to judge how reliable you are before they ever hand over the keys to an apartment.
Let's break down your personal borrowing ecosystem. First, you have a line of credit, or LOC. This is revolving credit. The keyword feature to remember here is that interest is calculated daily, and the rate is usually way lower than a standard credit card. It's what people use for big things, like home renovations. Second, there's overdraft protection. This is your account safeguard. It literally prevents bounced payments when your balance accidentally drops below zero. And finally, your credit limit. That's simply the maximum you can spend on your card. The exam trick? Knowing that simply asking for a credit limit increase can trigger a check that actually temporarily lowers your credit score. Sneaky, right?
So that brings up a really crucial question. What happens if you try to make a payment, your account hits zero, and you do not have that overdraft protection we just talked about? Well, you're going to see a number like $45 suddenly pop up on your bank statement.
Ouch, right? That $45 is what's known as an NSF fee, which stands for non-sufficient funds. It's a punitive fee charged by the bank when your account just doesn't have the cash to cover a transaction. This causes a bounced check or a totally failed payment. Whenever you're reading a complaint letter in the exam, where a customer is furiously angry at a bank, always look for this vital keyword combination, insufficient funds directly causing a painful NSF fee.
All right, Section 4, Housing and Big Transactions. We've reached the ultimate Canadian milestone in our financial story.
When we're talking about purchasing property, the very first major term you'll encounter is mortgage pre-approval. This is a guarantee document from your bank that locks in your absolute maximum loan amount and your interest rate. The keyword trap here is all about the timeline. Getting a mortgage pre-approval is what helps you know your exact budget before you ever start house hunting. Literally, if a test question asks what a home buyer should do first, securing this pre-approval is basically always the correct answer.
And then, when it's finally time to hand over that massive down payment for the property, you absolutely cannot use a normal personal check. No way. The text might say something like, the seller requested a bank draft for the down payment. You have to use a bank draft or a money order. The exam is testing if you know that this specific piece of paper serves as a guaranteed payment voucher. It means the funds are already locked and guaranteed by the bank, which is a strict requirement for huge real estate transactions in Canada.
Section 5, Mind Map Strategy Summary. Let's bring all of this together and quickly review the strategic takeaways from our mind map.
So by anchoring these 13 essential terms directly to their cultural background in real-world scenarios, you completely bypass the need for tedious rote memorization. Remember to leverage the context. E-transfers just need an email, and void checks are the literal keys that unlock direct deposit and pay add. Navigate those tax traps by contrasting the completely tax-free nature of a TFSA with the upfront tax deduction of an RRSP. Spot the penalty triggers, knowing full well that a lack of overdraft protection leads straight to those awful NSF fees. And of course, follow the transaction timelines. Get your mortgage pre-approval before you even start shopping for a house.
Now that you've unlocked the actual Canadian financial context behind this vocabulary, you honestly have a massive advantage. So how will you apply this cultural mind map to instantly spot the traps on your exam day? Trust your new understanding of how the Canadian system actually works, look for those keywords, and you'll find the right answers practically jumping out at you. Thanks for joining me on this explainer, and happy studying.